Let's start off with the fact that we've seen consolidation of East Africa, and with it calls for a combined stock exchange or a streamlining of activities within the capital markets. How is this going to enhance investments in the region?
I think having effectively that they would create a centralized point of call for investors to come through, and I think obviously that'll make it a lot easier for investors who are looking to invest through the region. Currently, Kenya has quite a few cross listings, for instance, on the Uganda Stock Exchange. So it makes sense that integrating that regional exchange to create volumes and create liquidity.
All right, so in the context of these reforms, Kenya is also talking about creating an alternative exchange for small and medium caps. The JSE has the Altex, London has one as well. In Malaysia, what's needed technically to do this? And we know that small businesses are the drivers of jobs in Kenya, but many of them don't really have great survival strategies. So the feasibility of this plan. Yeah,
I think given the slow pace of listings for the much larger corporates in many of Africa's exchanges, it makes sense to encourage the smaller businesses to list. I think in the larger exchanges like the JSE that you mentioned in London, there's probably an issue around lack of liquidity on those markets, because for most investors they're just simply too small in terms of a market cap screening. So, but you'll find in markets like Kenya, I think, where the retail investor is pretty big, you do have a lot of individuals who put in small amounts of money into the market that those shares would actually trade. So I think it would be feasible to actually get that sort of market.
All right, let's talk about reforms in other parts of East Africa. Rwanda also wants to make its capital markets more dynamic, pushing up volumes. Currently, we're having a situation where the stock exchange probably trades once a week, and trying to get themselves up to speed. What's needed there?
Rwanda, they're still trying to push. There aren't any listed equities at the moment. They do have an OTC market with Kenya Commercial Bank and Nation Media from Kenya that are cross-listed there. But I think they've been trying to push the government to push the privatization process a lot quicker. But given issues around, I think previously, in terms of audited accounts, corporate governance structures and that sort of thing in place, that wasn't there. So I think that's why there's been this delay in terms of listing companies. But I think there is an expectation that possibly fourth quarter or first quarter next year, there will be a listing coming on stream.
All right, another member of the EAC is Uganda, and is expected to be a giant with oil production due to come on stream sooner. They've only got about 12 listed companies, and many of those are cross listings with Kenya, as you're referring to. They want to deepen the corporate bond market. Is that the way to go when other people will be saying you need to promote local investment and local companies listing?
I think if it's local corporate bonds, I think it still makes sense. You find a lot of the African exchanges initially started trading bonds, initially state bonds, and then moved on to the corporate bond market, and then we saw an increase in the listed equity space. So I think certainly it would be positive to encourage more corporate bond listings. It all helps to deepen the overall.
But isn't that the challenge
market
in Africa, is that when it comes to government bonds, people are prepared to go in there because the chances of a government becoming bankrupt are almost nil. But people aren't so confident when it comes to corporates. And across Africa, there's a need to deepen the corporate bond market, but it's really something that many investors are reticent about.
I think there has been a bit of a shift in that regard. In a lot of for instance, in the past couple of years, when the equity market was coming off, we saw corporate bonds being issued in the likes of Nigeria and Ghana, which had very decent yields, and you actually saw a switch from listed equities into those bond markets. So, whilst I take your point, but I think we have seen a change in terms of sentiment, and if the bond is priced properly, I think many people are happy to actually take on that risk.
Where do other countries within the AAC feature within some of the reforms that are being mooted in East Africa? And I'm talking here about countries like Tanzania that have taken a more protective approach on investments and listing, and Burundi that doesn't even seem to feature in the conversation.
Yeah, I think Tanzania is moving forward. I think last year sometime they recently they were initially, as you say, a bit reticent in terms of the system that needed to be in place that could trade or that could integrate with the system in Kenya, but I believe that they've now moved beyond that. In terms of not allowing regional investors to participate in the IPOs, that has been an issue, because obviously that takes away the whole point of regional integration. But I think as the East African Stock Exchange Association, they are working on harmonizing that.
Okay, and finally and very briefly, Kenya is said to be the best performing bourse in Africa, gains of over 32% year to date. Uganda is seeing improvements of 28%, so some would argue it's fertile ground for investments and equities in East Africa. Do you concur with that view, or what issues of caution need to be raised?
Yes, certainly, I think we definitely concur. The IMF is expecting that region to continue showing strong growth. You mentioned Uganda oil. Rwanda has been trying to position itself as a services IT hub around the Singapore model, so that they're showing strong growth as well. So definitely infrastructure, we certainly see a lot of opportunity there.